Presumptive Democratic presidential candidate Joe Biden weighing in on taxes today, telling potential donors that if elected, he would, quote, get rid of the bulk of Trump's $2 trillion tax cut. And a lot of you may not like that, but I'm going to close loopholes like capital gains and stepped up basis. Biden also saying he would hike the corporate tax rate to 28, looking to raise an estimated $1.3 trillion over the next decade, Jim, something he told Squawk Box earlier in the month, I think, and something that people like David Kostin at Goldman have talked about broadly in terms of market impact and earnings impact. Yeah,
look, you really slice a gigantic amount of the S&P profits. And when you start talking about capital gains, you know that there's at times capital gains have been taxed like ordinary income. At times they haven't. Capital gains are really the province of the wealthy. There's not any dispute of that. If you're going to say, listen, that's not true, you're obviously ill-advised. And so I think that the market goes down. I've been saying that. I mentioned that the market goes down because the S&P price earnings go down. And I think there's a lot of people who don't even recognize that there is a correlation. But, you know, David, we have a lot of new people who've come into the market. And I think they are baffled about the notion of things like the S&P profits and how it relates to price-earnings multiple. And I got taught by Lee Cooperman at Goldman. I know when I started, I didn't recognize the relation, and I was wrong, and I got taught, and then I taught others. So, you know, David, what I see is that there are people who just don't even think that what Biden says matters, when we know that would cut earnings. You may favor it, hate them or like them, it does cut earnings.
It may well cut earnings. And, of course, we are still sitting here. Certainly we have debates when Secretary Mnuchin joined us, well, previous to the pandemic, or Larry Kudlow, about the impact of the 2017 tax cuts, Jim, whether they really were a broad-based way to get the economy moving in a much stronger fashion, or whether they were a particular benefit to corporate America, which then went out and spent a lot of the newfound profits on buying back stock. So that debate will continue. One thing that I think will not be in debate, though, whomever the administration is, whether it's the current one or whether it is a Biden administration, is going to be facing enormous budget deficits and the need to potentially raise more revenue if and when the economy does start to get going again and we're on the other side of this pandemic. We're talking about, of course, record budget deficits now as a result of all the replacement aid. I don't really call it stimulus that we've had to put into the market. And that's expected to continue for some time. I don't know, Jim, how taxes are going to be viewed. But to your point, and of course, to the larger question of the disparity in incomes in this country that has been widening more or less, let's call it, for the last 20, 25 years, capital gains, some say, and taxing it as an ordinary income would be at least one way to start getting at that.
Right. I mean, I think you go back to President Reagan. I thought he did a lot of good things, and I think he would be aghast at the Republicans and how much they've given away. Again, you guys got to read the history. He just didn't favor what's happening, but he did change the tax code to fix some loopholes. Carl, I think that it's not our generation that's going to have to face this problem. So I think that we can. We're very cavalier, but there will be a generation that will have a reckoning. I've got Dave Cote on tonight. He is former CEO of Honeywell and has been one of the principal preachers of let's worry about our grandkids and what's going to happen, because it's a little nutty.